Hello, everybody. Buffy the Rate Slayer here. And yes, we are back with the fourth and final episode of the March 2022 Weekly Market Insight Series directly from the Capital Markets Trading Desk right here at SunWest Mortgage Company. Global equities remain erratic with an array of central bank events and an exacerbated situation in Ukraine. In case markets didn't grasp the spirit of Fed Chair Powell's message after last week's FOMC meeting press conference, he reiterated on Monday that officials will use whatever it takes policy to restore the price stability, and this time markets heard him loud and clear. He mentioned that nothing will keep the Fed from hiking 50 basis points in May if the situation warrants. Bond markets followed an unprecedented rout throughout the week. Benchmark yields rose anywhere from 44 basis points and more in March alone, with several reaching fresh highs. As the war is about to enter its second month, President Joe Biden faces a crucial test of his ability to project power and reassurance amid the biggest European security crisis in decades, as he seeks to reunite U.S. allies for harder-hitting sanctions to punish Russia for invading Ukraine. European Union and NATO leaders met in Brussels to discuss the war as Russia intensified air and sea attacks across Ukraine. President Joe Biden mentioned that Russia might use chemical weapons in Ukraine. NATO Chief Jens Stoltenberg warned Moscow against any nuclear saber-rattling. The highest-level Russian official and President Putin's advisor, Chubai, quit his job and left the country in protest against the war. So, what else is driving the market? Well, gold surged, and global benchmark Brent oil rose to $122 a barrel as the fear of sanctions induced extreme volatility in the commodity markets. New home sales decreased 2% month over month in February to a seasonably adjusted annual rate of 772,000 units from a downwardly revised 788,000 in January. On a year-over-year basis, new home sales were down 6.2%, likely due to less supply resulting from cost pressures for builders and emerging pressures from rising mortgage rates. Mortgage applications slid 8.1% in the week ending March 18th, matching the second biggest weekly decline in more than a year. Purchase applications slipped 1.5% and refinancing activity sank 14.4%. The U.S. Central Bank is expected to lay out a template to shrink its $9 trillion balance sheet for the process known as quantitative tightening. Fed Chair Jerome Powell signaled the final plan may be unveiled on May 4th. Britain's inflation rate surged to a new 30-year high of 6.2%, adding to pressure on the executives to protect consumers from a tightening squeeze on living standards. Initial jobless claims data for this week was surprisingly strong and indicated the tightest labor market. New jobless claims fell from 215,000 to 187,000 in the week ending March 19th, marking the lowest level in more than 50 years. Federal Reserve hawks and doves are joining Jerome Powell's call to get going on raising interest rates to curb highest inflation, where hawk President James Bullard reiterated his call for interest rates to rise above 3% this year. Dovish Fed member President Mary Daly is also backing the robust action. So buckle in. The Fed already had an acute inflation problem on its hands, and with the Ukraine situation, it has worsened. The goal will be to get the Fed rate back to neutral, which is considered to be the 2% to 2.5% range. The question is, how fast can this be done without stifling the economy? Well, we'll just have to see. So that's it for the week, everyone. Join us again for the first episode of April 2022 and get more updates on the geopolitical nervousness, figures on trade balance, consumer confidence index, personal income and spending, GDP price index, non-farm payrolls, and much more. Stay updated with our news, and our trading desk will keep you informed with pricing incentives. Happy Friday, everyone. Have a great weekend. Buffy, out.